Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 30th of April, the last day of April of 2021. This is episode number 1984. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. First of all, sound like a goat. Just a quick mic check, just make sure I'm not running hot over here. And we'll dive right into the convergent trading pre-market summary sheet. Risk off sentiment. We've basically come right off of the levels we finished at yesterday. We had a very bullish finish on the close yesterday in the indices, and this morning a clear risk off sentiment with crude being the biggest loser this morning, down $1.57 or 2.42% on crude, followed by the Russell, which is down 25.2 points, or 1.1%. The Nasdaq's off 105 points, 0.75%. The S&P's off 23.5 points. So we're opening in a gap down, but it's an internal gap. We're still inside of the prior day's range. The leader today is silver. Slight allocation to safety. We're seeing the Bund higher by 28 ticks. However, the bonds and the notes are pretty much unchanged. The notes are up 2 ticks on the futures. The bonds are up 2 ticks on the futures, and the 10-year notes are up just a tick, with gold rising $1.40 or 0.08%. So even though money's being pulled out of the equities and energies, it isn't going into treasuries, and it's not going into metals. Looks like from this summary sheet, it's going into Bitcoin and Ether as those keep climbing and climbing. So that's where we say, that's where we stand today. The S&P has traded 195,000 contracts, 195,000 contracts so far in the extended trading hours. Relatively wide range, 2174 to 4174 quarter to 4201.50, about 27 points. Double distribution profile. We'll go over that in a minute. With the overnight inventory 99% short, 99% short on the inventory overnight. And that's where we stand today. What do we have today? I want to remind you that the Chicago PMI number comes out to subscribers, to private subscribers, at 9:42 or so in the morning. So you may see a little flutter at that point. It's not as impactful as it used to be. And it comes out to the public at 9:45. Michigan sentiment comes out at 10. It is the final release, not the prelim, so not as impactful. And that clears the deck for today. The main headlines is Apple's likely to take a hit in a fine from Europe for their music business. Earnings continue. Bond yields are still in play. Stimulus still in play, especially with this new proposal for another $1.8 trillion from Biden. Nothing major, no headline type earnings today, and that's where we stand. Okay. Let's take a look at what was expected yesterday. Yesterday, primary scenario was looking for it to revert back on the primary scenario, was looking for it to push lower into the 4,200 area, and I said it's probably going to poke through that 4,200, and then was looking for a pop once that test is done for a push into the 4,219, 4,220 measured move up high. The secondary is a push above the overnight high 4208.50, and then a drop into the prior range was really looking for 89.50, 89.50 as a key target below. That's the main play. If the market cannot find buyers, that would be the main play. Go to 89.50, and then below that 41.8150 is our MC point of control right down here, and that would be a key figure to pay attention to. That is the balance point of this entire region right here. The balance point of this whole run is 41.8150. You could see a point of control, point of control, point of control overlapping each other at that price, 41.81. Very important area still in play as we speak. We're trading 41.77 currently. Keep that number in mind. So 89.50, 41.81. Here's what actually happened in our review segment. Let's get rid of the market generated lines here. So a fair amount of activity versus the prior day. We pushed to 42.11. That's our opening swing high. We open, swing high, very clean, clear test. Swing down to 42.02 quarter, and then back to the open. And then from here, there was nothing to be done by the buyers here. It's just well offered, continuous offer at the open, and then it turns around and it becomes responsive. So gap rules yesterday, and the gap wasn't a gap and go situation. It wasn't a gap and go situation. It was a reversion, which is nice. It's nice to see that. There's that provides quite a few more opportunities. We end up breaking into the prior range, and of course, as I said, I'm looking for the 89 test, and that gets hit fairly quickly. It does bounce around a little bit before it finally tags it right in here. And then from there, it goes right to the point of control, 41.8150, which is the MC point of control. Nice bounce there, 6.5 points, 6.5 points before it drops. And then we come and retest the prior day's high, unable, and then we get this final push lower. Nice little consolidation breakouts yesterday. The reversion back, let me turn on the lines. The reversion back into this area. This is a huge confluence area here between 41.88 and 41.91. And the expectation is we had an impulse in the morning, nice pullback continuation. And on the bigger time frame, this may be a mid retest for continuation lower. So there was a fight here. There was a battle in this zone, and it finally broke through, provided a nice little pullback. There was a little ledge here. Nice little pullback trade before it decided to take off, and that was a nice big impulse, the largest impulse of the day. This gives us a bullish finish. If we look at the profile, multi-distribution profile, pretty odd-looking profile, but we moved from the upper distribution down below into the prior day's range, which is right here. These green lines is the prior day's range, and we crossed the entire prior range to push through the low of the prior day at 72.75. We went to 68, and then we came back to the other side and finished near highs. So this is not a neutral extreme scenario, but it is against the prior day. So this is quite bullish action here. We interrupted the one-time framing up as we did this, and it looked pretty much set to continue to that 42.20. And then in the overnight session, it wasn't able to do so. Again, I know this is a broken record, but again, the Delta participates on the short side. We saw the same action as we've been seeing for the last week, and that is the market pushes up, sweeps down, and then comes right back to the sweep, continues, pushes up, sweeps down, and the sweeps are happening with size. The relative delta is very high on these sweeps. For the very large lots tend to sell, hold sideways, and these continue to look like hedges to me in the futures against either option positions, ETFs, or outrights, or individual large cap stocks. Who knows? But it looks like there's a fair amount of hedging, and that hedging is showing up as aggressor sellers, and so the delta is still negative, and it's misleading at the moment, and it has been for about 2 weeks now. So actually, since the roll. Uh, so that's where we stand today. We finished near highs. We would expect it to trickle up. There's a high probability it would trickle up. We shift the point of control to the top of the range, and we finish near highs. We do expect the overnight session to take out the high with pretty high probability. Well, that wasn't the plan for these guys, because we open up and we immediately start pushing down in the Asian Open. And then we continue down, and then we finally get to the middle of the range, and we go sideways until the Europeans come in. The Europeans are choppy during the Bund Open, and then on the Equity Open, chop for a little bit, and then immediately drop for what is an impulse pullback continuation type setup with no significant tests. So we ended up with a double distribution profile going the other way in the overnight session. I mean, the volume's not that heavy. It's heavier than it's been most of the week for this time of day, but it's really surprising that we're down here given yesterday's finish. It really is. So we'll see how that rolls. We'll see how that rolls into the open, but we're near the lows of the overnight session. The LVN is not super obvious. It's right in here at 41.85, and then we have the 41.81 right in here that we have to contend with, and we're holding this area. So 41.85 becomes a very, very early kind of over underline in today's action, like a line in the sand. 41.85. We'll see how that gets responded to. The big picture, just to keep our grip on what's going on, the big picture is we did not breach the weekly low. We got really close yesterday. We went to 68, got to 41.6675 on Tuesday. We got to 68, and then we left this excess looking candle, this big wick underneath us, away from this 41.81 area. Again, very bullish looking setup here, but we were not able to maintain. We closed right at 4,200, by the way. Right on the dot. So we closed at 4,200 in the pit session, and then from there, it just did not see the light of day. The overnight highs 42.0150. It really didn't get much play, and it just is being squeezed lower, and it's holding steady in this lower distribution for the week. This is bearish now. So when we open, we would want to see, if I'm going to go in and take a 100 lot position, that's my clip size, let's say. I'm going to want to see that the buyers are failing to push through 41.85 before I'll commit 100 lots short in this trade. So this is what's important to pay attention to today. Is it going to move away from this high volume node or not? 41.85 being the line in the sand. And if it's unable, if we see that it's lifting, but it's not going anywhere, or if there's no lifting at all, then it's a better bet to the short side, and we may see some pretty strong activity today that brings us back into the 41.50, whatever it was from last week. this point of control right here, 4152.75. So that 4150 area. So if it's not able to lift today, it is likely to see a pretty strong move to 4150 and then potentially even lower. Okay, 4123. Is that clear? So that's where we stand today. Pay attention. I'm also traveling today, which was always a good volatility indicator. Here we go. So what's the plan for today? The plan for today, I need to make this very, very brief. Plan for today, expecting responsive buying, open auction in range, responsive buying back to the 4185, 4186 area, looking for this to fail, to respond, consolidate here, take out the overnight low, and then squeeze higher into the rest of Friday. The better play, and why am I doing that? It's because the trend is your friend, as they say. Open auction, attempt for 4185, consolidate up here, impulse down, take out the low, and then start walking back down. Start walking back down to the prior weekly close, and then potentially 4160, and then the big place to test is 4152. 4152 down here. Okay, 4150, 52, so 50. That's scenario 2. So it's a matter of what do we do to take back some of this territory at 4185. We'll see how that works. The prior week high and the prior all-time high is 4186.75. So consider this a fuzzy area right here between 80 and 87. This becomes your big box, big gray box here to figure out which direction the bias is in or which side the narrative is likely to support. So yeah, I'm taking off at about 12:30, 1 o'clock Central. So if you're looking for some volatility, it'll probably happen after that. Anyway, enjoy your Friday. Good luck, and I'll catch you on Monday morning. Take care.